Well, good evening once again, Velocitites. Listen, I just got a question that I would love for everyone to please pay attention to this because this is crucial, okay? Super crucial. He asks, Ruben, this whole video goes out to you, all right? Thank you. Ruben, he says, thanks for the info, but why pay more interest in credit cards, 15 to 25%, versus car loans, 3 to 8%? And also, the minute you carry a balance over the 30%, he's talking about the credit utilization that I've explained elsewhere in my videos. Once you've gone over that in 30% in credit cards, your score drops substantially. Well, Ruben, thank you so much for that question, and that's a valid question, right? Why in the world? Because we were taught in school that 3 is greater than 1. Is that right? So if they say 6%, let's see, 6%, okay, in interest, or would you take the 20% in interest? Obviously, the one who isn't that learned in finances and how interest is accrued and the different types of interest there are, they're going to say, listen, I want the 6%. And that is exactly what the banks, what the dealerships, and what everyone else that has amortized loans, that's exactly how they want you to think. They want you to think that 6 is less than 21. You know why? Because, please answer this question for me. 32 degrees Fahrenheit, 0 degrees Celsius. Is that the freezing point of water? All things considered, right? Okay, it is. All right. Now, which one is higher in temperature? 32 degrees Fahrenheit or 1 degree Celsius? Which one's hotter? Okay, which one is warmer? You say, well, 32, because 32 is bigger than 1. No. Remember? We're talking about Fahrenheit and we're talking about Celsius. 2 different forms of calculating temperatures. It's a different scale. And the banks have done the same thing. You see, over here is called what type of interest? Can you guess? Look how simple the calculation is. It's called simple interest. Over here, you have abominable interest. Right here, look. Isn't that complex? This should be called complex interest, abomination interest, okay? Because look at all the calculations you have to do in order to come out with an interest rate. While over here, it's simple interest. That's why 21%, not only 25%, Ruben, but 30%, 40%, 50% is going to be greater than 60%. Amortized. It's going to be your best bet. Now I said greater, didn't I? Listen, I meant it's going to be better that you get the 50% credit card versus your 3 to 8% amortized, because it's calculated differently. Don't be fooled. Okay? And this is the calculation right here. You want to see it? Here you go. Right, look. And what you can do, Ruben, plug your numbers in here and comment. Absolutely comment. Oh man, I tell you what, if you plug 400,000 in here, you're going to get $500,000 in interest. And there's actually a formula that had some more numbers in it. I do apologize, I don't have that as of yet. But plug these numbers in, Ruben, and then comment on the YouTube channel. Yeah, and see if your 15 to 25% simple interest card is going to be better than your 3 to 8% car loan. Now, let me just say this, okay? There are dealerships who do not do the amortized, all right? And that's great. If that's the case, then you know who to go with, right? And you know what to do. Isn't that great? But you need to ask them, hey, is this going to be simple interest or amortized? They're probably going to dance around. They're gonna dance around because I know the finance. I used to be, a car dealership. I know how the finances go and whatnot. They're probably gonna dance around. They're probably gonna say, "What does it matter?" Just let them know, hey, it matters. Okay, and don't be surprised if they snuff you, man. If they're like, "Hey, listen, sir, we got to get you out of here," huh? Just look at your statements, okay, when they come in. Absolutely, and you will see that is the case. But that's why I would pay, 30%, 40%, and let's go ahead and tackle the credit utilization. Do you remember when I said that the credit scores, they go up and they go down and then they go up? It all depends on what your strategy is. If you have a goal of paying off your car right now, then go ahead and utilize the tools that are for you. You can also ask for a credit interest drop. You can ask for a credit limit increase so that utilization goes down. There are a number of different things you can do. Go ahead and reach out to me, Ruben, creditwiz@investorpro.org for more, maybe a more tailored solution for you. But don't be fooled, folks. You see this? They're not telling you that the 6%, the 3%, the 2% is amortized. So that's what we need to ask the financial institutions, these lending institutions, whether it's dealerships, whether it's banks, anyone, private money lenders. You need to ask them, listen, is this loan? Is this line? Right? Because lines are supposed to be simple interest, right? Is this going to be simple interest? Or is it going to be amortized? And they're probably going to look at you like, what? You've been listening to the Velocity channel, haven't you? Get on out of here. But you're going to find one that will suit your needs. If not, contact me. creditwiz@investorpro.org. I trust this helps a whole lot. Go ahead and continue to ask me questions. I dare you to stump me, all right, on any questions regarding business credit, real estate investing, okay, business startups. We've done it. We're doing it. We'll continue to do it. And we thank you so much. If you like this video, go ahead and subscribe and let me know what you need. God bless, and you have a great night.